Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. It's just gone 5 past 1 PM on Tuesday the 30th of March 2021 and we're going to spend the next few minutes looking at Bitcoin. Right then, we're going to do our basic analysis first, Elliott Wave analysis second as always, but a quick rundown of the chart in case you're new here. Right, we have our Elliott wave count on the chart, which is all the numbers and letters. We're just going to move it out of the way so we can explain the rest of the chart clearly to you. We are in the weekly time frame on log scale here at the moment. It's how I tend to prefer to look at Bitcoin over the long term. We have 4 exponential moving averages, 10 in yellow, 20 in blue, 60 in orange, 250 in green. We have a volume profile on the right hand side showing the various peaks and troughs of buy-sell volume, with the extreme of which being marked by our yellow dashed line, which we call the point of control. We have an RSI set to a 10 close, with the green 30 level representing oversold conditions and the red 70 level representing overbought. We have a MACD with a 10 for the short term moving average in blue and a 20 for the long in orange and a 9 to smooth it out. Right. What can we see here on the weekly time frame? Let's just zoom in a bit on the recent price action. Very close to making the all-time highs. Very close to making the all-time highs. What do we want to see if we are bullish? You just want to see a weekly close. I know it's only Tuesday, but you want to see a weekly close of the body of a candle above this previous all-time high to be bullish for the week going into next week. Which I think it looks like it could be doing. It looks like it could be doing that. It may even break it while I'm talking to you now. We'll see what happens. Above the 10, above the 20, above the 60, and above the 250 exponential moving averages. Miles away from a point of control. RSI's back into overbought conditions, above 70 just on the weekly time frame. Never even came back to neutral territory yet during this sideways movement. MACD is showing the blue moving average, the short-term moving average, starting to flatten out and lose some momentum here. Some darker green bars and the histogram declining, suggesting a breakdown in bullish momentum over the weekly time frame. The same with the quite extreme divergence we're seeing here in the RSI. We have a high, a lower high, and a lower high, where we've got high, higher high, and higher high. In price, we call this a bearish divergence, and suggests bullish momentum dying off before a severe correction. We have not seen a severe correction, and this bearish divergence, could disappear with another thrust back up into overbought conditions, which could be on the cards. So, we've got a little bit of conflicting data here. Over the longer term, we seem to be losing steam. I think that does make sense because of my own wave count, and the Elliott wave count has us approaching a 5th wave of a 1. So we're likely to be seeing a dying off of momentum before a major correction to come in the future. If it was on cycle wave 1 degree, that correction could be huge, but it could still be a few weeks and months away yet, so there could still be plenty of upside left before we see that big correction. Still bullish over the very long term, as that correction I'm talking about will simply bring us into a wave 2, and then we're going up even higher in a wave 3, so all of that to look forward to. So let's come down to the daily time frame. We had a slight move below the 10 and the 20 exponential moving average, but no bearish crossover between them on the daily time frame, and I'm now trading back above both of them, closing in on that high as we speak. Still way off the 60 and the 250. Daily RSI did not get into oversold conditions, did dip just below the 40 on the 40 to 60 neutral zone, but we did that touching or just below it all the way through these 3 swings here. We've gone there, and there, none of them visiting oversold conditions. The MACD and RSI still showing that high, lower high, lower high, lower high divergence between price and RSI, and we're seeing it in the MACD here as well. From a more recent high, we're seeing a divergence between these 2 highs and these 2 highs. However, we do have the blue line crossing over the orange, short over the long, and a little peak of a green bar appearing on the histogram here. Probably a nice big green bar. If we do push the week to new all-time highs and hold it by the Friday, we'll probably see a nice shift in bullish momentum here if that high gets taken out. So that's the basic analysis done. So let's bring up the Elliott wave for a minute and have a look. Right, so I've had to rejig the count. I pull out my previous video saying I favour the flat. So if we're going to make that flat pattern work, and it's still legit, we have to change our degree of looking at it completely. So we're going to go full screen here for a minute, come to the 2 hour. So here was my idea. A, B, C. So it should start at the start, Tom, not halfway through. So A, B, C, A, B, C, 1, 2, 3, 4, 5. Well, that didn't happen, right? Just didn't happen. So if we're going to stay on the flat pattern at the minute, we have to push for the target of the 1.618 instead of the 1236, which is the one I've got labelled here, which is around the all-time high. So we have to look at it like this instead. 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Okay, like that. Because the whole thing's just moved up a notch. This does change our bullish count, which we're going to have a look at as well. And the problem with it changing our bullish count is we had an overlap over the 1 and the proposed 4, which means we now have to interpret it. If we're going to interpret bullishly, we have to interpret it even more bullishly. You'll understand why in a minute. So why do I still feel this is a possibility? 5-wave move here, 3-wave move here, at the beginning of a 5-wave move here. This would be a zigzag and would support a 3, 3, 5 and would push the expanding flat to greater extremes. Now if we just take the length of our if we just do a fib retracement of the length of our A, what do we notice up here at the 6, 7, 7, 3, 8, 1, 5? This is where I projected the 1.618. Right, this is a 1.618 of the A. But what's really interesting is we definitely bottomed here. So, or at least I'm bloody sure we are. So in that case, we come up to the A, right? We come down to the B, and we pop it there. And look where the one-to-one parity is. 69051. Okay. And we know that we just measured it. Look what's in the neighbourhood, 1.618. So we could come up to 90%, the length of A I've got here, finish below the 1.618, or we could do A, B, C parity and just go beyond the 1.618. And this would still be a legitimate expanding flat. So if you're looking at it from that perspective, even if you're bearish and you want to sell this, not that I would short Bitcoin, but if you wanted to, or you're still waiting to load up and this is your preferred count, then you really are obligated to wait to see 5 waves complete. 3, 3, then 5, then pick it up in a month or two's time or a few weeks' time. Either way, in the short term, and you're a bull, we're still doing this. We're still looking like we're coming up in 5 waves to a higher high. So there's still money to be made in the short term on the long time, on the long trade anyway. All right. So that's the more short-term bearish view, which is it's a tricksy B wave. That's what B waves are there to do. They're there to break previous highs, right? B waves come up in an expanding flat, break the previous high, drag loads of balls in, loads of momentum chases in them, and they get to the top, go fuck you, buddy, and then they come down. You know, that's the way they work. So that's my interpretation from a bearish count. I still think it's legit. I'm still waiting for direction myself at the moment because I brought a little bit down here. I haven't brought this. And the bullish count I'm about to show you is making me a little frustrated with myself because if the bullish count is right, then I missed another buying opportunity. Got it here on this initial 3-wave move thinking it was complete, but you never know. The greedy side of me might still get what I want. We might still get that move down and get back in down here. But if not, so what? We're going higher. Can't be upset about that, surely. So let's move at the over to the bullish count and see where we went wrong here. So, although the bullish count is correct, and if it turns out to be bullish, then the way I've interpreted it was simply the wave degree was off. Let me explain what I mean. I said in my previous video as an alternative that 1, 2, 3, 4, 5. Well, obviously I didn't have the 4 here because it would have been an invalidation point. It has been invalidated. We've dipped below where the wave 1 completed, so that interpretation is wrong. Okay, so what that means is we're actually more bullish. So we're going to delete that. And what I've had to do to the chart is say 1, 2, but not 3, 4. I've had to say 1, 2, 1, 2, 3, 4, 5, all the way up here into a 3. So it's actually way more bullish. Now, I was sat down just the other night. I picked it up off a shelf for the first time in a few months, and I sat down and decided I was going to read through Elliott Wave Principle, Frost and Pretcher's Elliott Wave Principle, and I actually came across something really early in the book. If you want to, you can follow along if you want, if you've got a copy at home. And it was page 32, 33, figure 1.8, and it's about the correct counting of a third wave extension, and that's what triggered me. When I saw this overlap, I was like, well, this is either a bearish 3-wave structure or it's super bullish. Because we can't have an overlap, right? And this would have been overlapping the 1. So this has to be 1, 2, 1, 2 on a wave of lesser degree, and then blah, 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 3, 4, 5 higher. So it goes to prove you can read it as many times as you want, and you can carry on with all your Elliott wave analysis and doing all your work, but every once in a while it pays to go back to the source, which you just might find a little gem that triggers you about some bloody basic principles that you sometimes miss. And this was one of those occasions. So that's it, guys. 2 counts still. Sorry I can't give you 100%, but belief in either. This is a complicated count at the moment because we're potentially in that wave 4. You see, if the corrective pattern is right, this wave 4 is going to finish over here, then all this sideways chop has been here to shake us out and just muck us about, alright? And that's exactly what a wave 4 is supposed to be doing. It's time consuming and it's confusing. So, feels like we're on course at the moment. That's the bearish count. We're going to come up into a deceptive wave B to a new high somewhere around 67 to 68 grand, and then we're going to start a big sell-off, and that divergence we've seen in the MACD, the RSI is going to start paying off, and we're going to see a breakdown in price, which could bring us significantly below the previous wave A low of 43,000. We could come down significantly, have a big sell-off, right? If the bearish plays out. If the bullish count is correct, we'll go straight through that 67,738, that wave B target, and we'll correct on a smaller time frame, and we'll just keep pushing higher and higher and higher. So that's it. That's the best I got for you guys. I hope you've enjoyed it. If you're new to the channel and you've liked what you've seen, please smash the like, leave us a comment in the comment section below if you like. Subscribe, obviously, and yeah, feel free to share any of these videos and hit the bell notification icon to remain informed of future video releases. And one other thing before I go, I recently put a video out announcing that I'll soon be launching my Patreon. Soon is a bit of a flexible word because I'm about to become a full-time parent again over the Easter holiday, and I would like to at least have a few months practice running the Patreon and the tiers that I want to run before the summer holiday shows up. So I think it's probably best that I leave the launch until after Easter. Then I can have a whole bunch of content to go on the release. People join up and get value straight away, and I can just keep the ball running indefinitely from that point. So I'll keep you guys in the loop and keep you informed, but thank you so much for those of you taking the time to respond on that video. I really appreciate your input, so thank you very much. Take care, guys, and I'll be back with you later. All the best. Bye bye.